All right, here we are, perpetual inventory system. So we're going to do some journal entries. This is chapter 5, some journal entries for some merchandising purchases. And so let's get right to it. So we do know we have the periodic inventory system. That is the easier one to learn. So that one's not as hard. But in this example, we're going to do perpetual inventory system. So that's a little tougher. And we're going to do some practice journal entries for recording under that inventory system purchases. All right, so it says here, journalized purchase transactions. Explanations are not required. For in this case, we don't have to worry about writing the explanations. Normally at the bottom here, you would write your explanation for that journal entry. In the real world, always are doing that to describe what this journal entry was for. But in this case, for homework, we're not worried about it anymore. We know that write a detailed explanation. We're just caring about you getting the right accounts and then obviously doing your debits and getting your debits and credit account for the accounts correct. Okay, so the first transaction we have here is May 8th. Archer Spy Supplies buys $113,300 worth of J Bond merchandise on account with credit terms now of 210 and 60. So let's go over what that means. So that can be written in different ways, but in this case, the 210 means 2% discount if paid within 10 days. Okay, so if 10 days, get a 2% discount. So let's just remind ourselves that that 2 is a 2% discount. And within 10 days. That's a terrible D there. Okay, so our 210 means 2% discount within 10 days. All right, not too bad. So if we saw 315, it means 3% discount within 15 days, or 120, 1% discount if paid within 20 days. So that's the incentive to pay early. And so in this case, if you can pay within 10 days, you get a 2% discount. Sounds like a little bit of a discount, but when you're buying tons and tons of merchandise, it can add up. So it's a good incentive for some companies to take to have a discount in the amount that they owe. So we'll pay attention to our dates as we get to things when we're making the payment for our purchases. All right. The N60 means, well, if you missed the 10 days, then the full amount is due in 60 days. All right. So if you miss those 10 days, you don't get that 2% discount, and the full 113,300 is due in 60 days. All right. That's that N60 means. All right. So let's write that down. Full amount due in 60 days. So you can see N30, and that would be full amount due in 30 days. So those are the credit terms in this case. Okay, so let's stop doing that writing. Let's actually type because that's neater that way because, I'm sloppy. And let's start doing our journal entry. So we have here on May 8th, so let's type in our date, May 8th, and they buy $113,300 worth of merchandise. So they're getting inventory. They're getting inventory at a value of $113,300. Inventory is an asset. It's a debit balance then that we're increasing this merchandise inventory account. So merchandise inventory, and it's going to increase by the 1, 3. Oops. All right, so that's our debit. What is our credit? Well, we didn't pay out cash yet. We owe it, so we have accounts payable for the $113,300. Perfect. And then, if you're writing an explanation to record purchase of merchandise inventory or something like that. All right, let's keep going. So we have on May 12th now. So let's go ahead and write in our date here, May 12th. Might as well. Archer Spy Supplies returns 11,250 of merchandise to J-Bond due to damage during shipment. So they got the merchandise in, and maybe there was water damage on the merchandise or whatever, and they returned it back and said, hey, we don't want this inventory, it's damaged. So they no longer owe $11,200 worth of merchandise, right? And they no longer have it on their shelves. So we see here that we had increased merchandise inventory by 113,300. And now we're going to say, well, we really don't have $11,250 worth of merchandise now because we're going to return it. We returned it. So we're going to do a credit to that merchandise inventory account to decrease it. Makes sense. What's our debit? Well, we no longer owe 113,300. That's what we recorded that we owed. That was our liability. And our liabilities increase with credit, right? We're going to decrease. Now we no longer owe $11,250 worth. So to decrease, we'll have to do a debit for accounts payable. All right, so we can see that we're decreasing that accounts payable by 11,250. Let's scroll up because I can see that my head is in the way there. Okay. And then now we're going to say, okay, we also don't have this merchandise inventory anymore because we returned it. So we're going to decrease our inventory with that credit. And there we are. Not too bad. All right, so let's keep going. Let's scroll down. And we have here that they paid the amount due less return and discount. Okay, that was on May 15th. So let's go back and look here. We made the purchase on May 8th and our terms were 210. So they were nice to you because they wrote to remind you that you get the discount, but we should pay attention to the dates, and we see that it is less than 10 days that we paid it, right? The 8th to the 15th, that's less than 10 days. So we do get the discount because we're going to pay it within the 10 days. So we do get 2% discount. So I'm going to write 2% here just to remind myself so I don't forget as I talk about what we're doing. So we have some steps for us to calculate what we have left, what we have left to owe. I mean, if you can do this in your head, that's great, awesome. But I'm going to go ahead and just write down the steps for this as well, just so you have it for notes. So let me just scroll up a slight little bit to make sure I have enough room to write everything. All right, perfect. I think that gives me enough room. So the first step, let's find our remaining balance that's owed. Okay, so we had originally 113,300 sitting there for being owed for accounts payable, right? So I would say step one, if you're trying to write yourself, to keep yourself organized and know what you're doing. I know my head disappears, but it's okay as I write on this. We're going to say, okay, figure out what the remaining balance is. So it's 113,300. That was originally what was owed. And then we had returned 11,250, right? So what's left remaining is 102. I'm just going to look over there, but if you can double check me with a calculator. And that is my remaining balance. All right, perfect, back. All right, so that's my remaining balance that I have, and I paid within. Don't forget, yeah, that's what's sitting there right now in accounts payable. You know what? Let's do a T account to make sense of that too, because I know I did the math for it, but let's actually do a real legit T account too. All right, so if we scrolled up, we would have saw here that we had accounts payable for 113 for the credit. So let's go ahead and do that. And then if we screw it up again, we had a debit for 11,250. So you could have done it this way. I like the T account, so I decided that I need to show you this way as well. And then what's our remaining balance? That is the 102, 50 bucks. All right, that's balance. So that is my balance. Oh man, that looks awful. There you go, balance. So that is my balance due. That's what I have sitting there right now in accounts payable. And you can see step one, that's the same math thought process, but I just figure we show you the T account and what it looks like for that in the ledger. Okay, so we're not done yet. We paid within the 10 days, and so we get that 2% discount. So we got to do a little bit of math. It's okay. You double check me with the calculator. And so we have step 2 is figuring out that discount amount. All right, so we're getting a discount not off of the 113,300 because we returned 11,250. The discount's taken off of the 102,050, right? So 102,050 times 2%, right? The 2% discount, and that is 2,041. All right. So that's the discount we do. Under the perpetual inventory system, the discount decreases inventory's value. Hence, we'll have a credit for this amount to inventory. All right, so you're learning just something new. And this is our discount amount. Yep, let's write ourselves a note that this is their discount amount. And let's write another note that this discount decreases inventory's value. Okay, so now we have all our numbers that we need to make our journal entry. So let's go ahead and do that. So Archer Spice Supplies is now paying the amount due less return and discount, which we just calculated. So let's do 515. And so let's go over some things. Well, they're going to pay out some cash, right? Are they going to pay out the full 102.50? No, they're not, because they get that 2% discount. So what's the cash that's coming out? Well, cash being paid. Let's write cash paid. Let's make sure my little circle's not in the way. Equals 102.50 minus the discount, which was 2,041, right? And so that is 100,000, and I can see my circle's in the way. I'll move it up, $9. All right, so that is the cash paid out. So that is my cash that's going out. Well, that's my credit, okay? So we have my credit, we have my accounts payable balance. This is what I'm paying now, right, for my journal entry. So I'm paying that out with cash. The full accounts payable, we're going to debit because we no longer owe it. Yes, I know we're paying out less cash. Don't worry, we'll get to the balancing of this in a second. So I know I need to get rid of that full balance of accounts payable. Yes, I know we're paying less than that, but we still want to say we no longer owe this. We no longer owe this full amount. So we are going to record a debit to accounts payable. All right, to get rid of it. That's what we have to do to get rid of accounts payable. So there's our debit. Debits are first. So let's go ahead and do that, and then we'll make sense of everything in a minute. I just told you that our cash going out was less the discount amount. So we know that we have a credit to cash for $100,009. Oh, so we don't balance. Our debits of accounts payable, which we have to debit accounts payable for the full amount. I know we're paying less in cash because that was our incentive, but we still debit for the full amount. That's circled there on the T account. And then we know we're only going to have to pay out because we got a discount for the $100,009. And hey, I wrote you a note here about the discount, how we handle this discount in step 2. And I said that that discount decreases the inventory value. So out there, my inventory's T account right now had what we originally bought and then our returns. So let's do this. our merchandise inventory. All right, if we were to scroll up, oh, we had 113,300, right? For debit. And then we had the returns, right? The returns was 11,250, right? Credit. And so my inventory is right now sitting at 102. I don't know what happened there. All right, so that's my T account right now for my ledger balance for merchandise inventory at 102.50, but it's not really that value because I got a discount on what was owed. So the real value of my inventory will be less that discount. And that one I did not do the number for yet, but we know that that would be 10, the same amount of the cash. All right, so that's on my inventory cost right now. Well, I need to do a journal entry to make that be recorded as well. Oh, hey, that's my missing balance here. That's my discount. Let's do inventory just to be proper. Seriously, come on. There we go. Cool. My debits equal my credits. If I add up my two credits, it equals my total debit. That makes sense. And so I just reminded you again that the discount decreases the inventory's value. So I do have to decrease my inventory's value, which is I did prove to you here with the T account. And so our new value for the inventory is $100,009. All right, hey, that's my second question there. The inventory cost for Archer Spy Supplies is, oh yeah, I just did that. I just did the T account there. Awesome. So we are done. We did everything. We explained it. We have some T accounts for us to help reconcile that ending balances, and we have our tricky T account, our tricky journal entry done as well. So that is it for this video, and we're going to go over in the next video some purchases again and then some sale of the inventory.